All right, let's be honest. You're probably at a point where you've been trading ICT for a fairly long amount of time, but you seem to have just hit a wall. You can't win trades no matter what your analysis says. You're probably waking up every single morning with somewhat of a plan, and then you have no idea where price is going, what the direction of price is. There's four things that tell you bias is going to be bullish, and there's four other equal things that tell you bias is going to be bearish. You don't know exactly where to short. You don't know where to buy. You've hit a premium, but there's bullish gaps telling you that we need to keep longing. It's just all become such a jumbled mess of tons of concepts, and you basically just have no idea where the actual market narrative is going, okay? Now, ICT did not make this easy, okay? I went through that exact same thing a little over 2.5 years ago, where I was at a point where my win rate was just super low and I was crashing out because I had a low win rate. Like, even when it seemed to be an easy day, I would keep losing trades, okay? And that is before I took it into my own hands to just simplify ICT, okay? Now, in this YouTube video, that's exactly what I'm going to discuss. How do you simplify ICT? What are the main concepts that you actually need to focus on? Because a lot of it is just background noise, right? A lot of you might be looking for a unicorn setup every single day and never see it, okay? Just random shit like that. But you get the point. Let's actually dive in on how to simplify ICT so you can increase your win rate, you can start absolutely printing money with prop firms, and really become a consistent and hopefully eventually down the line full-time trader. Before we dive in, none of this is financial advice. I'm not a financial advisor. Trading is risky. Past outcomes do not guarantee future results. Without further ado, let's go ahead and get into the first concept that really opened my eyes to simplifying ICT as a whole. And that is going to be the market maker models, otherwise known as MMXM. We have MMBM, which is a, market maker buy model. And we have an MMSM, a market maker sell model. Okay. Now, this is the first thing when I really started focusing on, just viewing the market as market maker models and not viewing the market as fair value gaps, liquidity imbalances, etc. This is where I really started to print money. Okay. Now, I'm just going to zoom out on the hourly time frame and look at what we see is a clear market maker model. Okay. Now, I'm going to explain this obviously in simple terms, but what you're going to have is bearish movement and bullish movement. So this is what we call our sell side curve. Now, this is called our buy side curve. Now, essentially with market maker models, what you need to understand is not, oh, I know exactly price is going to reverse here, or we're going to consolidate here. All you need to understand is, look, the market moves in a stair-stepping motion. Okay, once we've hit a premium or a point to sell, we will see displacement. We will then see price move sideways, displace, move sideways, displace. All this is the market moving in a stair-stepping motion. You will then have your reversal. What do you know? Displacement, stair-step up, displacement, stair-step up, displacement. Think of it as just fucking big-ass ICT walking his fat legs up some stairs. Okay, if that helps you think of it, then perfect. But this is how the market moves. Okay, there's nothing truly complicated to market maker models. Now, sometimes market maker models will either just move straight up sideways and just consolidate, but other times they will form a power of three where they accumulate, they manipulate up, and then they continue lower. Kind of like this one. We accumulate, we manipulate, and then we distribute. Now, your goal as an ICT trader, and I feel like this goes for any concept, any entry model, once you build that discretionary muscle in the market and just honestly common sense, you want to participate in distribution legs, right? You want to catch the displacement. The most money you can make is in these high volume legs, right? It's not in the consolidation. So we're trying to avoid entering in the consolidation, and we're trying to enter in these high volume price legs, okay? Which is obviously the distribution phase. So what my model focuses on is a power of three: accumulation, a manipulation, and distribution, okay? We wait for a manipulation to happen, we enter somewhere around here and catch that big distribution leg, okay? Let's clear the charts here and just go over this example of the market maker model we have right here. So once I have identified a point where we wanted to reverse, okay, right here, we swept out data highs, we pushed up, and now whatever happened for us to see a reversal, we start to see some displacement, okay? Now, what am I gonna do? I'm not just gonna try and fucking YOLO along, which a lot of you do this. A lot of you will wait for distribution to happen, be like, oh shit, here's the high volume. I'm gonna enter here and try and catch the whole leg down, and it's moving real fast. It's not gonna stop bleeding, right? We're done consolidating. But no, we're probably gonna see another reaccumulation leg. So what I like to do is, on the higher time frames, mid time frames, even on the lower time frames, and I'd like to preface this real quick, market maker models, like most ICT concepts, it's a fractal, okay? It happens on the weekly, the monthly, the daily, the 4 hour, the 1 hour, the 5 second. It happens on every single time frame, okay? So you can use market maker models for your bias. You can use market maker models for your entry, okay? It's very versatile. I think it's the most important thing you need to understand. Market maker models in combination with a PO3, because the two go hand in hand, okay? So once you think you're seeing a market reversal, you're not just gonna enter right when you see high volume, okay? What you're going to wait for is called a power of three. So you wanna wait for price to accumulate, and not just for price to accumulate, but to form an imbalance. And here we actually did tap into it, so not the greatest example, but we'll go over one. But as you can see, you wait for accumulation, price to move sideways. If we dip down a time frame, we can see this a little bit more clearly. So I'm gonna mark that out in green. Wait for price to move sideways after making a large move to the downside. What do you wait for after that? You wait for a liquidity sweep or a manipulation opposing your bias, okay? And some people will get faked out and think, oh, we're gonna continue bullish here, and they get destroyed because they're trading a fucking breakage structure, right? I'm not shitting on breakage structure, but yeah, if you're trading a breakage structure, trading with the overall trend here, you're gonna get wiped if you don't understand market maker models. If you're looking at the market from MMXM point of view, you're like, okay, this is a sell model PO3, accumulation, manipulation, back into where we started to make that higher volume. Okay, it's not going to go all the way up here. You don't want to see it go too high up, but just basically into that last distribution leg. It could be an untapped fair value gap. It could just be an order block, a PD array. Usually though, we want to see liquidity grabbed. In this case, we built up some liquidity from the accumulation. We have a high here. Both of those got swept. So step one, high volume movement. Step two, accumulation. Step three, manipulation. But it has to be significant. We have to grab some form of liquidity, highs, lows, fair value gaps. And then once you see more volume back to the downside, that's when you can start diving into it. Okay, so right here, we can see, okay, we're clearly entering another distribution leg. If I wanted to, I could even dive down another time frame and probably catch an easier short. Like right here, we get a 5-minute inversion fair value gap, okay? And you could literally just short the 5-minute inversion and catch the next distribution leg back to the downside, right? Let's play that out and we can see the high volume come out there as well. And then obviously we'll see another market maker model leg form as we saw on the higher time frames. But this is such a ridiculously powerful concept to understand, okay? Now, one more thing. This is where the entry model gets really, really powerful. You take market maker models with PO3s, those two are hand in hand, right? And you combine it with a time-based model or a higher time frame candles price movement, okay? So real quickly, let me just jump onto the 4 hour, okay? What does the 4 hour look like right now, okay? After we put in this big ass candle, looks relatively bearish, right? We have some liquidity down here. The market's kind of been moving sideways. We reached a pretty good fucking premium. There's no logical reason for us to, keep retracing, right? So to me, the 4-hour just looks bearish. The last 4-hour candles were bearish. So I'm going to assume the next one follows suit. But not even that. That's even overcomplicating it, right? It's so stupid simple. Looking at that is overcomplicating it. All you need to do is combine a PO3 with what is called an open high-low close of a higher time frame candlestick. So what you want to do is you want to spot market maker model PO3 on the 1 to the 5 minute time frame. Okay? That's all you need to do. And what you need to do is just go to indicators. You can look up any high time frame candle. You want to put a higher time frame candle next to your lower time frame. Okay? Just use this one. This one's free. And go to your settings and click 4-hour. This is the one I like to do it on. Again, we dive into this for an hour, but this is a fractal concept. I don't want this video to be, fucking 3 hours, even though I could yap. But yeah, you pair this with a higher time frame candlestick. Okay? This is so ridiculously powerful. Like, everyone I know who prints stupid fucking money with prop firms, you see them using a higher time frame candlestick. Okay? So you spot that PO3 on like the 1 to the 5 minute time frame, and you put that 4-hour candle beside you. You want this PO3 to line up. So you want price to open, the new 4-hour candle to open, and for price to accumulate. Okay? Around the open of that new 4-hour candle, you want to see accumulation. It could be a little bit before, during, or a little bit after that 4-hour candle opens. But within the first, 10, 15 minutes, you want to see this happen, if not before. Then you want to see price manipulate, just like in your PO3. But you want to see this manipulation put in a top or bottom wick of the 4-hour candle. Lining with your bias. Assuming we're bearish and we're trading a bearish PO3, we want to see price manipulate to put in the top wick of a 4-hour candlestick. Okay? And this is because just candlestick anatomy. This is so stupid simple, right? What does every candlestick have? A dummy can answer this. It has a body and a top and a bottom wick. Okay? The way candlesticks form is generally, if we're bearish, we need to form that top wick far before we end up expanding lower and closing and forming a bottom wick. Okay? That top wick gets put in first. Like majority, over 95% of the time, that's going to happen unless you have consolidation candlesticks. But yeah, you see a PO3 and you get your confirmation once you see like an inversion, a change in state, whatever you need to see, right? So in this scenario, it was just a 5-minute inversion, and all you're doing is trading the expansion of a higher time frame candlestick, right? You put in the high of that, now we're going lower. That's all you're doing, okay? This is, and I know it might seem intimidating or complicated at first, but it's so stupid simple once you get the hang of it, guys. Just looking, let's look for a market maker right here. Okay, what do we see? What do we see? We see a buy side curve and we see a sell side curve. How are these formed, right? Where do you see right off the bat after watching this video, where would you enter? There is 3 points I see I would enter. First point, right here, accumulation, manipulation, right? And you could go onto the lower time frame or just take this first inversion. Boom, entry 1. Now what do? We wait for another PO3, right? We have a little bit of accumulation, we have a manipulation, and we wait for price to push up. You can enter here, or you could even wait for more and enter here. Again, this one might be tricky to enter, right? You might need to drop to the lower time frames, right? You see big displacement, accumulation, and it's not always going to manipulate, okay? Those are the scenarios where I use other confluences, discretion, etc., just to confirm. And I usually go light risk when I don't see a perfect PO3. What do you see right here? 1, accumulation. 2, manipulation into that last displacement leg, a fair value gap. It's grabbing liquidity. And then you see a big ass candlestick back to the downside. You're gonna short. Let me simplify it even more for you guys. Trade a PO3 with a high time frame candlestick. If you are in a very clear market maker model buy side or sell side curve, target the lows of the last curve. If you're selling, Target the sell model lows right here, here, and here, and even all the way down at the climax if you want to. Okay? It's really is that simple. And again, you flip back to a buy side curve, target the highs. Okay? It's that simple. And look, boom, targets the highs, right? And not every single market maker model is going to be picture perfect. Okay? But this is on the daily time frame. If you zoom in on the 1 to 5 to hourly to 4 hour, you're going to see market maker models everywhere, okay? And that doesn't mean every time you see a market maker buy or a market maker sell model occur, you're going to act on it, right? You need to have narrative. But market maker model, please, please, please go back test this. If you want to back test this, the easiest way to do it is go to 10 a.m. Eastern on your chart and turn on that 4-hour candle indicator and look for a PO3. If you see a PO3 and it aligns with your bias, take it and back test that data. Go look. It's absolutely ridiculous. You can back test 2 p.m. 10 a.m. is my favorite, but 2 p.m. is also great. And try and get good at trading the expansion of a 4-hour candle's narrative, okay? Once you see a top or a bottom wick put in, if it makes sense for that candle to expand, then trade it, right? It really is that simple. Now, if you guys don't know, I live trade this literally every single day. We had an absolute banger week this week, just trading the PO3 as usual, okay? So if you do want to watch me live trade that every single morning, I'm on 15 minutes before we even look for a trade, giving my entire narrative, my entire trade plan. We take the trade, we execute, we trim, and we sell our positions, and I recap the trade. This is every single morning that I do this. I've been doing this for the last 2 years in front of hundreds of people every single morning, okay? I have the data tracked. I'm very transparent with all of you. And I'm not going to bullshit you and just give you some fucking signals. Like, I make you guys learn. I answer your guys' questions in the live, obviously, but I have a full video course going over PO3s and market maker models so that you guys can master this for yourself. And not only that, I help everyone with prop firm stuff. I have complete, that's a fucking SVJ outside right now, Jesus. But anyway, that's besides the point. That should probably be one of your guys' goals, but enough yapping. This was a 17-minute long YouTube video. I hope you got a ton of value out of this. If this is your first introduction to market maker models, congrats. Your eyes have been opened. You can stop ignoring all of the ICT random fucking bullshit that you've been looking at for the past 6 to 12 months. And you can focus on market maker models and PO3s. That's what I did. That's exactly how I turned profitable. If you want to watch me live trade it and master it and expedite your process with it, just click the first link down below to join me every single morning. So again, I hope you got a lot of value out of this video. Drop in the comments if you have any questions about this or want me to cover anything else in specific that you're struggling with. See you later.